In this video, I'm going to show you 2 ways that I like to trade and invest. These 2 strategies will help you to be a successful long-term investor and trader. Simply put, they make money in any market that we're in. Let's get started. If you like to buy stock, you're going to love this first strategy. This is a strategy I'm using right now, and here's how you implement this strategy. Step 1 is to find companies that are successful long-term. Companies that make money in any kind of environment. And they have a proven track record of doing that. Now, although that was just a couple sentences there's a lot in those sentences. You might be thinking, that sounds like a lot of work, Randy. How do I do that simple and easy? I don't have a lot of time for this. There are 2 ways to find these companies. The first way, if you have some time and don't mind taking on a new hobby, is to do the research yourself. Research their fundamentals. Read articles about them. Get to know what they do. Research their management, read their financial reports, and just overall get a good understanding of what's going on with each company. And then add that company to your watch list as a potential stock you're going to buy. And I'll tell you when you buy those in just a minute. Or if you want to hit the easy button, here's another way you can find these companies. The second easy way to find these companies is to find someone you trust. Find someone who has a track record of picking consistently profitable companies. I offer this service to my patrons. Every weekend I send them a list of stocks that I've researched that I believe are fundamentally undervalued or fairly valued. It's a nice list for them to work off of, and it saves them hundreds of hours of doing their own research. Simply put, find someone whose opinion you trust who can share a list with you. That gives you a nice starting list to work from. You can then finish off the list by doing your own research. Please don't trust anyone's opinion, whether it's mine or someone else. Do some of your own research. But getting those lists is a nice way of shortcutting the process of how to find these successfully long-term companies. Once you have your list of companies up, add them to a watch list like you see I have here. Right now I have over 230 companies that I'm willing to trade in. These are companies that I've researched and I'm watching for them to go on sale. I'm watching for them to be selling at a discount so I can buy them in my outright stock ownership account. Once you have your watch list built, then use that list to watch for those companies to go on sale. And when they do, you might consider buying some. Here you see a couple weeks ago that I bought about 20 stocks that I believe are either undervalued or fairly valued, have great potential for growth in the coming years. And I shared these trades with my patrons. Once you bought these companies, then you're just gonna wait. You're gonna wait until the market figures out these companies are undervalued, or you can give the company time to show that tremendous growth that you were expecting. And once the market figures out that the companies you bought are undervalued, then I'll push that stock price up. And at that point, it's decision time for you. Are you a collector? Have you bought these stocks to hold them forever? Or do you want to sell them when the market has them overpriced? Just keep in mind that no one on this planet will get their stock picks correct 100% of the time. Some of those companies that are undervalued, they're undervalued for a reason, and maybe reasons that you don't quite know yet. But overall, if you've done your research, you're consistently buying undervalued companies or fairly valued companies that have a great potential for growth, then over the long run, you will do really well buying and holding stocks. Let me share just one example of how I did this recently. Unilever is a company most of you are probably familiar with. If you're not, you're probably familiar with some of their products. They're in the consumer defensive sector. They simply produce products that people use all over the world. Going back to 2022, I believe Unilever was undervalued. It had recently experienced about a 30% stock price decline. However, that decline by itself didn't mean it was undervalued. Notice the notes here I wanted to share with you about Unilever. I bought most of my shares between May, June, and July of 2022. At that time, Unilever's P/E was about 15.5. You see here, my note says that historically, it trades about an 18 to 19 P/E. Now, I did the research on the company. I didn't see that anything had fundamentally changed. The market was just discounting it at that time, and in my mind, this meant that I could buy a stock that was undervalued. In my mind, the market was wrong, and it was just a matter of time before Unilever's price went back up to match its historic P/E. So over this time frame in 2022, I bought quite a few shares of Unilever in my outright stock ownership account. Now notice how long it took. Throughout all of 2022, Unilever kind of traded sideways. And in 2023, it did bump up in a level, trading from a low of around 46 to a high of around 55. But I still held on because I thought it was still potentially somewhat undervalued. Well, then earlier this year, Unilever's stock price took off. So as you see here on July 23rd of this year, I sold all my shares of Unilever. At that point, it was trading for around a 20 P/E. So I believe at that time, it was actually overvalued. Now it may continue to go up, and I'm fine with that. I simply bought a stock that I believed was undervalued, and I held it until it was overvalued. At that point, I decided to sell it. Now, I could have held onto these shares, but Unilever is not a high growth company. So oftentimes, if a company like this gets overvalued, I'll go ahead and sell those shares and put that money back to work in what I believe is another undervalued company. So that's one of 2 simple ways I'm going to share with you in this video on how you can invest. You simply find great companies that have a proven track record of being successful and profitable and growing their income. Then you wait for them to go on sale, buy them when they're on sale, and then wait for the stock price to appreciate, At that point, you can just hold them forever, or if you want, you can recycle that money, sell them when they're overvalued, and put that money back to work in a new company that you believe is undervalued. That's the first way. The second way I like to trade and invest that makes me money in every type of market environment is to take what I mentioned at the beginning of this video, find companies that are potentially undervalued, and sell options in those companies. And here you see a nice example of that with the stock ticker symbol MDT. Over a long-term perspective, MDT usually trades around an 18 P/E. But throughout 2022 through 2024, it's been trading for around a 13 to 15 P/E. So historically, if nothing has fundamentally changed with this company, it's been trading for about a 20 to 30% discount. Because of that, as you see here, I've been accumulating some shares in my outright stock ownership account. That's the account where I buy shares of stock with the plan just to hold them until they return to fair value, or if they become overvalued, I'll consider selling them. And notice as a percent of my portfolio, I've accumulated about my full initial position size. My position size is about 2.5% of what my overall portfolio is. So I've been accumulating these shares over the past couple of years. Now so far, the market still doesn't agree with me. I believe the company is undervalued, but the market thinks it's fairly valued. So I'm just gonna sit on these shares. But that's the first way that I trade and invest. The second way is by trading options against this undervalued company, MDT. And as you see here in my spreadsheet that reflects all my trades in MDT over the past several years, I've pocketed nice cash by selling options against it. As a result of selling options against MDT, I put a net of over $6,500 cash into my pocket. And this is in a company that I believe is significantly undervalued at this time. Let me talk through this spreadsheet to help you see how you can use selling options to consistently put cash flow into your pocket every single month. So if I scroll up here to the top, you see that I actually began to trade some options in it back in 2020. We traded a little bit in 2020 and a little bit in 2021. But when I saw that it was really undervalued in 2022, that's when I really began to trade options in it heavily. Now most of these were cash card put options as you see here. But as you see here on December 29th of 2022, those cash card put options were assigned to me. So I bought 300 shares of MDT at $90 per share. And over the next approximately 6 months, I sold cover call options against those shares that I owned. Well, eventually those shares were called away from me, and I continued to sell cash card put options against MDT as you see in this area here. So over about the next 6 months, I consistently sold cash card put options against MDT and collected nice option premium. Fast forward to October 19th of 2023, and 400 shares of MDT were assigned to me. So I bought 400 shares at $82.50 per share. And then over the next approximately 10 months, I sold cover calls against those shares that I owned. And during that time, since MDT pays a dividend, I also collected this dividend. Eventually, as you see here, on August 17th of 2024, which is just several weeks ago, those shares were called away from me at the same price that I bought them at about 10 months ago. But during that time, I collected really nice option premium. And the result is, as you see here, I've pocketed over $6,500 in option premium and dividends against MDT, a company I believe is still undervalued. If you average that out by about the 400 shares I owned during this time, I've pocketed over $16 per share net profit in a company I believe is undervalued. And that's just option premium. If you don't like all the emotional highs and lows that you can feel when you read all these headlines or see all these thumbnails on YouTube videos and other types of videos, why not consider investing in a way that's simple and that makes sense? If you like to buy stocks in companies that are apparently undervalued, and then either hold those stocks for the long term or wait for them to be overvalued and sell them and replace them with new shares of other companies that are undervalued. Or why not work off that same list and consider trading options against those potentially undervalued stocks? That'll put nice cash flow in your pocket every month in potentially undervalued companies. I'd much rather trade options and own companies that are undervalued than ones that are way overvalued. So in my opinion, I'm investing in trading in a lot safer way than someone who's buying these highly priced companies, ones that I believe are overvalued. By trading options and owning some stock outright, you get the best of both worlds. You get stock price appreciation, but you also get cash flow. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. If you'd like to see how I find potentially undervalued companies, the ones that I own or that I sell options in, check out the video at the link above in the description below entitled Discover Undervalued Companies Instantly. Until next time, happy investing, and we'll see you again soon.